Hello, fellow traders. 'Tis I, the Rumpled One, coming to you Friday, August 6th. The year's 2021. Let's talk trading. It's time for the weekly wrap up, and it's NFP Day. Just remember, these videos are for educational purposes only. Your results may differ from mine. So, weekly wrap up. Let's look at the week. We're 27 pips below the weekly open. We're 87 pips off the weekly high and 10 pips above the weekly low. That's only 97 pip range for the week. That's a compressed week. I would think that next week we might see a big candle like this because of such a compressed weekly range, especially considering NFP day. I mean, in the olden times, NFP days, you'd see 150 pips just on that one day alone. And looking at the weekly opening range, you can see we pretty much were contained in the range. We broke out, but barely, just barely. It's just not much range this week. We crisscrossed the weekly open, so any weekly open traders, you were paid off each and every day. We're 229 pips above the yearly open on the pound. And if you don't trade the pound, you trade other pairs or any other instruments, you can, apply the same analysis to the charts as I do to the pound. You can look at the yearly open for whatever you trade and, the previous week's range and all of those things. They run across the board, even if you're doing cryptos or if you're, doing stocks, equities. These methods all works. Now, some work better than others, but what you want to do is you want to match what method you're using to the instruments within that realm that work best with that method. So some things work better with the buy zone. Some pairs work better with the buy zone than others because of their range. So you want to select those pairs to use, say, the weekly open. Okay, inside bar, you see we came back inside the inside bar from 4 weeks ago. So if we flip over to the weekly chart, you can see that inside bar, but guess what? Unless something drastic happens, we're going to have this is going to be an inside bar right here this week. So the lines will move and we'll be looking to trade that. This is, I can't remember an NFP day where none of the pairs ranged over 100. This, I mean, you might want to save this, note this day. Something's definitely going on with the currencies. I don't know what. But the biggest one is the new beast, the pound New Zealand, only 91 pips. The pound yen, only 59 pips. What's going on with the currencies? I mean, the euro dollar, only 80 pips on NFP day. If anybody knows, post it on either on the Facebook group or on the YouTube comments, because this is just some kind of compression like I've never seen. So maybe next week we'll have an explosion out of these. We can see the pound crisscross above and below the daily open, and here you can see it did it on the weekly open. So those, if you trade the opens, you were definitely rewarded. The pivot point was within the short zone. It got taken out. But, trading these opens can definitely be profitable because, once again, price has to range away from the open. So when it gets near the open, it's going to go away from it. It's just not going to stick around, especially on a pair like the pound that we know is going to range more than, say, some of the other pairs. So it's just not going to hang around these levels. And in fact, there was a trader, I'll get to that in a moment. Rat zone, the range is large enough. All the biases are short. You can see everything's red. And it seems like the green rats are trying to chew their way out of the rat zone. But I mean, this is NFP release right here. It's just not much. Not much at all. And we talked about pivots. There was a trader that was saying something about that's maybe the only indicator on their chart, but they haven't figured out how to use it. Maybe you haven't been watching the videos that much, you're not paying attention, but you want to fade from the open towards the pivot. That's how you trade the pivot. And then once it gets near the pivot, it's usually going to range. And the TC and BC, this is the central pivot range right here. And one of these is the previous day's midpoint, and then the other is the mirror image. So let's say if the previous day's midpoint was 10 pips above the pivot, then you also mark the line 10 pips below. So you've got the bottom channel, the top channel here of the central pivot zone. That's how that's traded. And then there's the pivot trading plan indicator. And inside the indicator is the link to the site that has all the documentation. I just programmed it to make it easy for you. So the TRO pivot trading plan indicator right there. And you can put notes if you want. But if you look inside the code, there's the link. So maybe what I should do is put the link right here, and then people would know. But that's what you do. And of course, they also tell you what to do near S1 and R1, etc. That's the pivot trading plan. But my main trick is to fade the pivot from the open to the pivot. So today it would have been a short trade. And as you can see, the shorts would have paid off. And then some. Let's see. It said it was going to be a breakout. That's interesting. And once again, on the pivots, you can see we haven't missed any pivots this month. We missed one last month and once in June. Then you could go back to November. So you can see there's just very few pivots being missed. And even when they missed, you can see if they get filled later or how much they get filled by. Oh, and then one other stat is we put how many times it missed 2 days in a row, how many times it missed 3 days in a row. And this is over the last 250 bars. And as you can see, if you get 2 misses in a row, chances of you getting 3 are almost slim and none. But let's say not none, but they're slim. So after 2 missed pivots in a row, you're definitely going to go for that third pivot to be taken out. And what happened here, we had a missed pivot. We had a missed pivot. Price opened below the pivot. It took out 1, 2 on the same day. So that's another way of trading the pivot. So I hope that helps that trader out there. Wick zones in and out of the upper, in and out of the lower. Once again, simple horizontal line trade, statistically based. Simple. Range for the week, once again, 96 pips. That's anemic. It's the big 0%. I mean, we had no breakout, either on the high or the low. The red rats definitely feasted. You can see once again, price ventured into the upper wick zone. Previous week's upper wick zone failed and then came out of the wick zone. So trading out of that wick zone definitely was profitable. And people go hindsight. No, we know what to do before it happened. So we're just saying what happened, but we already know what to do. So here on the, I called it PA simple chart, but I had added some things to kind of show outside bars and inside bars and biases based on price action here. But one of the things I did want to show you on this, let's see, this chart might be a little busy. Maybe I'll show on this chart. I think it might be less busy. But for the week here, you see there was this big down bar, and you remember I call these return bars. You see what happened? Now it took a while, but price returned to that level. Now, within that time, price put in a return bar right here, a big white candle. And you see what happened? Price went down, but right back down to the open here. Then it put in another big down bar, and you see what happened? Price returned to the open, but right here, there's a big up bar. Right here, there's a big up bar, but you can see price returned to the open, price returned to the open, put in a big down bar, put in a big up bar, but what happened? From here, price returned to the open, and on this big up bar, price returned to the open. So, and what do we have here? We got some big down bars. What do you expect to happen? Price to return to the open. Once again, simple chart analysis. You draw the lines. Does it work every time? No. That's why we use stop losses. I know I sound like a broken record when it comes to that, but this is just one way of trading, one way of analyzing the chart. And if you have the patience to wait, you can start to see when things happen. So you see we've got this big down bar, a 3-ball put in. You know, you take it up to maybe a 1-ball in the 1 hour chart, or maybe you wait for a 2-ball and you say, I can take some money off the table here. That's close enough. It comes back down, puts in a 2-ball. So you see you've got that 3-2-2 pattern there. So maybe it'll go back up, puts in a 1-ball here. Hey, that's close enough. Take some money off the table. You got a 2-1-1 pattern here. It already put in another down bar, big one. You have that one still. Take your chances off of the 1-ball. Okay, I'll give you that. That's hindsight, okay? But we're just describing what happened in hindsight. But, you know, I'm looking for this level, and this level right here. And we'll see what happens next week. On the dynamic fibs here, let's see, this is the weekly dynamic fibs. And let's just look at the daily chart to get an idea. So this was last week's range. You can see we returned to the 50% level off of that high. Looks like it just about took it out. And that's how it works. Okay, fellow traders, I hope you had a profitable week and a profitable NFP day. I wish you a fun and safe weekend. And when you come back to your trading platform, always remember, never forget, it's not what you trade, it's how you trade it. This is TheRumpledOne saying drain the banks and sign off.